Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now, the other thing that I need to mention in terms of income-based, a lot of times when people think of an income-based investment, they think, oh, it's income, so that means it's low risk, and they just send me a check every month. Not so fast. If you're an apartment landlord, you're an income-based investor a lot of times because you're looking to collect rents. Does that mean that people pay their rent every month? Not at all. If you are a covered call trader, you're an income-based investor. Does that mean that you're going to be profitable every month? Not at all. There's going to be months when the stocks go down in value more than the premium with which you collect. So as an income investor, this is something with which you need to be aware of when doing things on currency options. Now let's go back to the slides. We've talked about a way with which you can have currency exposure while not having as much currency risk and still being a part of it, so to speak. And that a lot of times was based on selling options. And you're basically looking to collect income. And with that in mind, there's different levels with which maybe it makes more sense to go closer to the money, maybe it makes more sense to go further out of the money. It's all based upon your individual situation. But now, let's say that we're doing this a different way. You're looking for protection, but you don't want to spend an arm and a leg on option premium. Let's say that you have a bunch of foreign stocks, a basket of foreign stocks, and you're not necessarily concerned with the company risk, you're concerned with the currency risk. Or maybe you do have some foreign bonds that you do know that you've done your due diligence on, that you believe are good bonds, but you're concerned with the currency risk. Well, first off, no strategy is perfect. You're always going to run into yeah buts. And what a yeah but is when you're presenting a strategy to someone and you tell them we can do this, that, and the other, and their first comment is, well, yeah, but you didn't factor in this. So with that in mind, no matter what you do, you're always going to run into a yeah but. Now, the other thing that I want to emphasize is that this is only a general example and that different people have totally different hedging needs. Also, what are you protecting? Are you protecting a bond? Are you protecting a stock? Are you protecting a current business? What are you looking to protect when doing so? Well, with that, let's go ahead and go back to the trade calculator. And I want to show you something that we've done with clients in the past. We're not doing it so much right now, just because from where we're at, the situation isn't dictating it right now. But this is just another tool to have in your arsenal that we have that that I'm happy to share with you. Let's say that we have a concern about the euro going down, and our concern is over the course of the next, I'll say, 6 months. Well, one thing you can do, you can go out to June. And you can buy a put option. So let's just say, real easy, quick and simple, we want to buy the, we'll just say the 129.5 put option for June. Well, with that, it's going to cost us, just depending on where we get filled, we'll say for sake of easy math, $4 if we want to get filled. And we'll also say for sake of easy math, we have $13,000 that we want to hedge that's exposed to the euro. So with that, if we were to buy that put option, it costs us approximately $4. Well, with that, that's a little bit pricey for us, let's say. The premium's a little high, and we just don't feel comfortable with that, let's say. Once again, this is not intended to be a recommendation. This is just a basic example. Well, one thing that you can do as a hedging tool, let's say that you want to hedge a portion of it. You can create a bear put spread, meaning you buy this 129.5 call, and you also sell the 124.5 call, for example. Now with that instead of paying $4, you're going to pay maybe a little over $1.50. And so you'll get $5 worth of protection for $1.50. That's one way with which to do it. That's what's known as a vertical put spread. Other ways of doing it, you can do a diagonal spread, meaning that you can buy the 129.50 put option, then maybe sell a December put option against it. So that way throughout time, what you can do is collect enough premium to finance the cost of your protection. Now with that in mind, you have to have various rules involved in terms of when to roll the options, when to just get out, what to do. You have to be more active when you're playing the spread game. But my point is that using the ISE currency option product, you have the ability to do that. You have the ability to set up some type of an income-based trade. You have the ability to protect your overseas holdings, your exposure, whatever the case may be. So it's something that can be of great benefit to you depending on your situation. Now let's talk about the bottom line and then we'll open it up for questions. What if the US dollar increases? Well, we're going to have more buying power across the world. Now the bad news of that is there could be less demand from other countries to buy from us. Foreign investments will not quite fare as well if the US dollar increases. If the US dollar stays the same, like stocks, not a lot will happen. Kind of compares upon the country with which you're doing a comparison. Recently, the Aussie dollar has been doing well. If you want to do like pairs trading, meaning you're buying calls on the Aussie and puts on the euro, that's been doing well as a pair. So it just kind of depends on what you're looking to do, basically. But like I said, I think it's unlikely, in my humble opinion, that no currency will move anywhere ever. The U.S. dollar goes down, folks, we got less buying power because of the fact that it's going to cost that much more for me to buy my Marriott dinner or whatever it is over in London. There could be an increase in demand for U.S. goods and services, and this could spark more economic activity, get more people buying U.S. stuff, and create more inflation. Who knows? It's a complicated, tangled web with which we weave, but it's something with which you need to at least have a basic understanding of what the risks are when doing anything. Now, a little bit about us at Know Your Options. We do managed trading and investing. We help people with long-term investments in terms of doing whether it's the equity markets, whether it's the currency markets. We're looking to do longer-term investments, and we believe in options in the long-term section of the portfolio so long as it's appropriate and suitable. We also do managed trading. If you're looking for someone to trade your account for you in the short term, that's another service with which we offer. We also offer self-directed brokerage with added value, meaning if you want to have a brokerage account through brokersXpress, which is owned by OptionsXpress, you can do that through our branch, and then if you ever have questions on a trade saying, hey, should I go long the euro today on these calls, or should I short the Aussie dollar today with these puts, or whatever the case may be, we can help you in answering those questions and give specific advice. And we also offer insurance depending on the state with which you live.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.